Hey everyone, welcome back to my channel. In this video, I'll share with you 5 stocks that I bought in January 2025. If it's your first time on my channel, I work as a finance manager for a top tech company with an MBA in finance and a CPA designation. Each month, I challenge myself to invest $2,000 into stocks. $1,000 gets invested into undervalued stocks and another $1,000 into dividend stocks. Today, I'm excited to share my January 2025 stock picks where I invested $2,053.96 into 5 different companies. A quick update before we dive in. It's been 10 months since I started this challenge, which means that I've invested a total of $20,000 so far. My undervalued portfolio is up by 26.6%, growing from $10,000 to $12,661. My dividend portfolio is down by 2%, going from $10,000 to $9,795, but it has paid me $168.98 in dividends so far. I project next year's dividend income to be $425.92, assuming I don't invest any more money. But realistically, it's going to be more because I'll continue investing $1,000 each month into dividend stocks going forward. And if we combine both portfolios, I'm up by 12.3% on my investment of $20,000 so far. So without any further ado, let's go over my January 2025 investments. I invested into 5 different stocks, 2 undervalued companies, and 3 dividend-paying companies. Undervalued stock number 1, Adobe. I purchased 1 share of Adobe at $431.03. I had 1 share of Adobe before this when I purchased it back in October for $505.45. Since then, Adobe stock price increased to $552 before going down, which is why I decided to buy 1 more share for cheap this month to lower my average cost per share. So as of today, I have 2 shares of Adobe stock in my portfolio at an average cost of $468.24. In the last few days, the price went even lower, so you could own Adobe for less than I do if you decide to invest in it now. So why Adobe? I think Adobe has a huge long-term potential as businesses and creators continue to rely more and more on their tools. And the biggest potential I see for Adobe is the rise of AI. Adobe as a company is in the best position to continue investing a lot of money into AI to continue growing. Adobe offers tools to edit your photos and videos, and I think those are the best areas where AI can really make a difference and simplify a lot of the tasks. Wall Street analysts have an average 12-month price target for Adobe at $575, suggesting there is a 41% upside in the stock price. So Adobe was a no-brainer for me in January 2025. Undervalued stock number 2, Pulte Group. I've been watching this stock closely for the past few months and decided to invest in it when the price went down. I bought 5 shares at $110 each for a total investment of $550. And if you don't know about Pulte, they're one of the largest home construction companies in the US. What drew me to Pulte Group is something personal. I live in an area where Pulte builds a lot of their properties and townhouses, and I've seen firsthand how in demand they are. As an investor, I like to put my money into companies I understand and have a connection with, and Pulte fits that perfectly. Just a few months ago, their stock was trading at around $150, but after a 25% drop in price, I decided it was time to buy. I see this decline as a great opportunity to invest in a solid company with strong fundamentals. What makes it even more exciting is that Wall Street analysts have set an average 12-month price target of $146, which suggests a 36% upside from its current price. With the housing market still going strong and Pulte's focus on building high-quality homes, I feel good about making this investment for its long-term potential. Now that we've discussed how I spent my $1,000 budget on undervalued stocks, let's move on to dividend stocks where I spent another $1,000. Dividend stock number 1, PepsiCo. PepsiCo is one of those stocks I just keep coming back to, and for good reason. This month, I purchased 3 more shares of PepsiCo at $151.78 for a total investment of $455.34. After this purchase, I now have 7 shares of PepsiCo stock at an average price of $158.18. So why PepsiCo? As you probably know, PepsiCo is a huge player in the food and beverage industry, and it's so much more than just the Pepsi drink. They own iconic brands like Lay's, Gatorade, Tropicana, Cheetos, Mountain Dew, and many others, which means they have incredible diversification across snacks and beverages. PepsiCo is also a dividend king, meaning they've not only paid dividends, but consistently increased them throughout their history. Their current dividend yield is 3.8%, which means that the company will pay me $3.80 each year for every $100 I have invested in their stocks. And I decided to invest more in PepsiCo because the stock has recently gone down, giving me a chance to lower my average cost per share. It's not a flashy or a high growth company, but PepsiCo is a great definition of a reliable long-term investment that generates consistent income. PepsiCo has strong fundamentals, and it's the type of company that will be paying me dividends for life. Dividend stock number 2, Mondelez International. Mondelez is another dividend stock that I'm reinvesting into. I purchased 3 more shares of Mondelez at $59.71 per share for a total investment of $179.13. After this purchase, I now have 10 shares of Mondelez at an average cost of $63.95. Similar to PepsiCo, I decided to invest in Mondelez to lower my average cost per share while taking advantage of their steady dividend yield of 3.4%. Mondelez is in the snacks business, which is incredibly resilient. And let's face it, people consume snacks regardless of how the economy is doing. That's why I view Mondelez as a reliable long-term investment. If you've ever had an Oreo or Ritz crackers, then you're already familiar with some of Mondelez's iconic brands. They're a global powerhouse with products loved in over 150 countries, and their diversification across various snack categories makes them a stable company. From an investor's perspective, Mondelez is a dependable dividend stock. Their dividend yield means I'll earn around $3.40 each year for every $100 I've invested in their stock. And given their strong brand and global presence, I see Mondelez as a type of company that will be paying me dividends for life. Dividend stock number 3, Verizon. I bought 11 shares of Verizon at $39.86 per share for a total investment of $438.46. After this purchase, I now have 23 shares of Verizon stock at an average price of $39.91. One of the main reasons I chose to invest in Verizon is because I like to invest in companies I'm personally a customer of. I've been using Verizon Fios for my internet at home for a few years now, and I've been a very happy customer. In the past, I've used other internet providers and have always ran into issues, but with Verizon, the service has been reliable and consistent. And if I'm a happy customer myself, that gives me more confidence to invest in the company as well. What makes Verizon even more attractive as an investment is their insane dividend yield of 7.1%. For every $100 that I've invested, Verizon will pay me $7.10 annually in dividends. That's a lot of money coming back to me each year just for holding their stock. So overall, for my January 2025 stock picks, I ended up investing $2,053.96 across 5 different companies. 2 of the companies are a part of my undervalued stock portfolio, and the other 3 are a part of my dividend stock portfolio. Each month, I also keep you updated on how my stock accounts are performing, so make sure to check out those videos as well. Thank you for watching this video, and I'll see you in the next one.